So hello, I hope everybody's having a great day. Here we go for another one of these short Substack videos. As usual, no trade calls, no recommendations, or response for their own stuff. We're here for educational purpose only. So yesterday during the daily webinar, we discussed Microsoft, and I thought it was an interesting dynamic to post here on the Substack. And basically, what's happening here? Well, we've had this unwind off this double top, right? But why is this particularly interesting? Well, if you step back a little bit, you can see that Microsoft, you had this measured move. So basically from the lows into the highs, we came back when we had that dip, 50 back got bought, and we moved aggressively in extensions through the 123, okay? And here, what happened is every time we popped back above here, we failed. We couldn't get any traction. So as we're hovering, as we failed there, we formed this double top pattern and a fairly aggressive unwind. And again, we're not going to discuss all those dynamics, but what I think is interesting is right here, right? What does this mean? Well, basically, you've got a situation where you've got this move down. Looks like we're trying to build some kind of an H pattern. I'm not going to go through all the dynamics on the H pattern, but what is interesting is that, broadly speaking, this is an area that gives you an awful lot of asymmetry, whether you're looking for longs or short. Now, naturally, market could easily try and catch everybody off guard and spend an awful lot of time with the 100 DMA, the 50 DMA capping to the upside, the 200 DMA holding it to the downside in line with these previous highs, and we just hold in a neutral zone. Now that doesn't matter, right? Because as long as in there, it's just a range trade. But what is interesting on a break outside of this broader neutral zone? Now again, for aggressive traders, I would focus a lot more on this H pattern, but I want to look at it in terms of bigger picture, broader picture here for the purpose of this this video. So what this means is that you can see that if we break above this neutral zone, what happens? Well, basically, we turn decisively bullish, not only because we've got gaps to the upside to fill, but what happens should we start to break to the upside? We're going into these highs, and what do we all know? We all know that there's no such thing as a triple top, right? So the break above here would ultimately, base case would be that we break this, because there's no such thing as triple top, and continue higher. So that means that on move above here, you've got an awful lot of asymmetry to look for longs, playing not only for the break of these highs, but for this being a very substantial swing low and continued grind higher all the way through next year. So that means that this whole zone is giving you an awful lot of asymmetry to the upside for those of you who are looking for longer term positions, looking to add this maybe to a 401k or something like that. Equally, should we break this zone to the downside, what happens? Well, basically, if you break it to the downside is you've double top, you've been unable to hold the 200 DMA, unable to hold this previous highs, this big previous resistance that now is acting to support. And what happens, not only do you have, like we've seen in an awful lot of other charts, the 200, the 2025 open attracting, but you've got a lot of gaps to fill to the downside. So equally on a break lower here, you've got an awful lot of asymmetry to look for this to unwind all the way back into all those gaps and lower. Now, furthermore, if you flip this on something like a weekly, you can see the importance of the hold of this structure, because that would give you a potential of an unwind all the way back down into the 200 week, these two previous highs around the 350, but also if you look at it on a monthly, you can see that not only you don't need a break of this whole zone, but just a close inside that rectangle. It means that we lose on a closing basis the 10-month moving average. And all of you know that we've discussed this before, the importance of the 10-month moving average from market timing perspectives, CTA perspective, mechanical trade perspective. So this, I think, is a very, very interesting chart, whether you look at whatever time frame you look at, because it's a good example of something that a lot of people may say, this is not that interesting. It's kind of stuck in this zone, whereas we'd say this is extremely interesting because this zone has the potential to resolve for a big move higher or a big unwind lower. So of course, nobody has a crystal ball, but this is the kind of asymmetry we like to look at when stuff is trading inside these broader ranges that could open up a big swing or a big unwind. Okay. Hope this was useful, guys. Wishing everybody an awesome one. Talk to you guys soon. Take care. Bye-bye.